Welcome everybody to the Chinchilla Pickin' Podcast. It is September the 1st, 2024, 4:15 p.m. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. My name is David Underwood, and I'm joined by the one and only, the bountiful, the Baron, the Bonds, Brandon Beaver. What's up?
I think I got a little bit of a sore throat going. Well, I know I got a little bit of a sore throat. I have a little cold going on again right now. Dave just said I look like Shaggy from Scooby Doo. I should have worn a green shirt to the show.
Wow, I didn't know you were gonna bring that out here on the podcast, but yeah, looking a little rough. It's all good
All
though.
right,
It's all good.
it's
We all
all right.
have those
We'll
days.
get there. Yeah, everybody
I
has
have
those
bad
days.
hair days every day.
Hey, it's not a bad hair day. I've got beautiful, luscious, golden blonde hair right now. All right, and you don't ever have bad days for hair.
Because I have no hair, so it's all good, man.
Never have any bad hair days, Dave. It's a cheat code that you've got going on right now. It's not
Well,
fair.
yeah, it's not fair, but it is not fair also for me. So I would rather have hair. Oh well, I'm okay with it. I've accepted it. That's the
Mm.
way it is. If you're listening and you're in the United States right now, you understand that it's college football season and NFL season, and those are hitting off. And no, I'm not buying the gambling stocks, MGM, or what's some of the other ones, Brandon?
Make money and then I'll care.
Pen
DraftKings.
Gaming, DraftKings, Pen
DraftKings.
Gaming, yeah, MGM. Well, MGM makes money because of the casinos, but they also have the online gaming part, which is like,
I mean, like have that sector make money as a total.
gotcha.
I'll care.
Yeah, DraftKings was that was near $100 a share at one point. Now it's all the way down to 24, I believe. That's what I
That's what
saw.
happens when you buy these. Often what happens when you buy the hype stocks, which is why I stay away from them.
Well, it's a good example of what's going on in the broader market here, and I'll explain the correlation here real quickly. It'll only take a minute. So DraftKings, Penn Gaming, all of them had a big boost 2 years ago, 3 years ago, when sports gambling became allowed, legal in
Mhm.
lots of states. It was just a couple of states you could do it in before. You had to fly to Vegas, of course, always had it. You had to fly to Vegas or to New Jersey, Atlantic City to do any kind of sports gambling. And then all of a sudden it became legal everywhere. And DraftKings, Penn Gaming, all exploded on the scenes, and everybody said, "Hey, they're going to make billions and billions and billions of dollars, and it's going to be amazing." And the stock and the valuations went high. And we've talked about this before with Virgin Galactic space travel, what happened with that valuation and where it went. And you saw the valuations of these gaming stocks, and then they just came crashing down after quarter of not hitting the right numbers. I say that in that, and I mentioned Virgin Galactic and what we saw with the space travel and that explosion and that bubble. And then you saw the marijuana stocks. Tilray was over $100 a share. Then it came all the way down to like less than five. It's gone up a little bit since then. But you see these when a new sector arrives, it blows up. Valuations get extremely high. Companies are able to take out billions of dollars of loans based on their valuations, and then they can't produce, and then they go and bankrupt or get bought out because they can't hit the numbers they need to. And all that to say that OpenAI just got a $4 billion valuation, or 10. Well, no, it was $10 billion valuation, the highest valuation it's ever had last week, and they took out a loan, and it makes me. That just puts the signals on like,
Yeah, maybe not.
yeah,
If
because
you
I've
got
seen this time and time
obviously
again.
partnerships with Microsoft and Meta, but once again, this is why you go with stocks that have proven themselves already, rather than the
Yeah,
hype.
and we're gonna get into one of them here in the show, but like it just Brandon, we've seen this time and time again. We've been doing this for too long that we've seen these valuations come in, and you're just like, oh, it's a great new sector, great new company. Of course, they're gonna be valued higher than IBM or whoever. That's a poor example. Sorry, higher than some other company that's been around forever. And yeah, and then they're gone in 5 years. So
Yeah, no, no, let's not do that. Let's wait and see. Patience pays.
Patience does pay. Patience does pay. In fact, we're going to talk about the king of patience here also on the show. We got a lot to talk about, so we better just get into it here. So rules. Brandon and I get together 5 to 10 minutes before the show, and we tell each other what we're going to talk about. Here to live back and forth, the bicker and the banter, right here on the show for you. As always, Baron, take it away.
All right. So in July, personal disposable income rose about 0.1% for the second consecutive month. The U.S. personal savings rate dropped 2.9% year over year from 3.4%, marking a 2-year low. There's some reasons for this, but I'll get into them. Diane Swank, she's the chief economist at KPMG, noted that consumers are discerning, but they're not defeated. They're kind of driving the economy right now, right? You know, it's 2/3 of U.S. GDP right now is consumer spending.
That's a big bunk.
Yeah,
That's a big
2/3.
part of it. Yeah.
Yeah. So this year's spending has been driven by a strong labor market and wage gains that outpaced inflation. This wealth effect from higher home values and investment portfolios is what has contributed to spending. So go ahead, Dave. I'm going to explain that here in a minute, but you can make your comment.
Yeah, it outpaced inflation this year, but not the last 2 years. I
Right.
just want to
Exactly.
do an asterisk right there. I want to make sure we're clear.
Right. So here's the thing. Here's what's been driving that spending, what's been driving consumer confidence staying relatively high. People don't feel the need to have a higher savings account when their home values have, almost doubled and their stock investments have almost doubled. They can take loans out against those things. They can withdraw money, from their stocks if they need to, from their 401ks, take loans against their houses and such. And so they feel like right now they still have that cushion. Whereas, if they were to become unemployed, they'd have something that would be liquid that they could rely on to get them through the hard times. So this is
See,
why
I
the savings rate dropping has not had as much of an effect on the consumer psychology as we would think it should.
see, and this is where I disagree with a lot of people, and I'm maybe too conservative with my own personal finances versus the average individual in the United States. Is I don't count on credit cards or loans. I only count on cash. Money I have in
Right.
liquid that is liquid, such as in stocks or something that I could liquidate very quickly within a week or so. That's what I would count on. I'm not going to count on a loan or credit cards because I mean that's just putting yourself in debt,
Yep.
and I don't want to do that. And that's why like my goal for my own personal retirement, and I recommend this for everybody, but I mean most people will not follow this rule is that I have enough to retire that if I lose half of it, I can still stay retired.
Yeah.
That's my goal,
Yeah, that needs to be your goal. It needs to be anything in life. If you can't afford it twice, then just say you can't afford it.
right? Yep.
So, but here's the thing. I mean, me and you both kind of came up more of our young adult years spent watching the housing crisis and all of that stuff. And so,
I traded stock through that, and that was exciting, thrilling, fun, depressing. You're crying one day and you're exuberant the next day, and it was like you were trading options, but you weren't. You were trading stocks.
yeah, I mean, I remember going through a very high income neighborhood and seeing about 2/3 of the houses foreclosed. Nobody was living there. Grass was overgrown. It was wild. And these weren't, Section 8 houses. These were mansions. So I don't know. Maybe it's a little bit like our, grandparents, great grandparents, and such, where, they grew up during the Great Depression. They didn't trust the banks, so they had mattresses full of cash and, all that stuff. And me and you, we don't count our house value as cash because we
Yeah,
know
no,
what can happen to it. You know,
yeah,
we
it could disappear. You could lose it. Yeah, 100% agree with you
yeah,
here.
yeah,
I don't trust the banks at all.
we saw our early portion of our generation and the generation before us refinance their houses and wind up on the wrong end of that.
Yep.
So I'd rather just get it paid off earlier rather than add to the back end of it. You know what I mean?
Yep. Yep.
But it is still right now, it's kind of, it's helping the psychology of the consumer, and it's driving the economy right now, I think. The fact that the
Yes.
S&P 500 is still near record highs, continues to go higher. Housing prices have not come down yet, and so people think they have that cushion. Here's the thing: if we do wind up in a recession, the S&P 500, the price of that can half quickly. We've seen that happen. Then what happens to your 401k? Go ahead, Dave.
Your 401k drops like a rock, and then you don't have that cushion anymore. It it it's like the American consumer learned nothing from 2007, 2008
Right,
at all. People would go ahead and take a second mortgage out on a summer home, and you know uh go underwater on trucks so they could get the nice truck or car that they really wanted. And at what cost? That when everything went under, they were just they went from, like, with this nice lavish lifestyle to nothing very fast. And I think that people just have a short memory.
right.
They have to, because I they're still doing it. They're just going in debt. They're like, we can always get more credit. We can always get more credit. I'm like,
Yeah.
wow.
So we're still low by historical standards on the unemployment rate, but we have had an increase in unemployment from January of last year, where it was 3.4%, to now where I'm sorry, it's 3.4% January last year to now where it's 4.3%. And I think if unemployment rate continues to go higher, the job market worsens, at a faster pace than we expect, I think that we're going to have some pain.
Well, the job market's already worsened. A year and a half ago, we had almost 11 million jobs available, and now we're down to 8 million last time I checked.
Right.
So the amount of jobs that are available has dropped.
Yeah.
So
Absolutely.
I mean,
So
the whole market as a whole has gotten worse. But I mean, I'm gonna let you continue with your point, because when you get to the end here, I think we're gonna disagree. But go ahead.
okay. Nationwide, senior economist Ben Ayers expects real GDP growth to be around 2% in the third quarter. What we're seeing right now, we're looking at about 1.8% for the end of the year for the last three quarters. So continued decline in GDP here. If the unemployment rate starts to or continues to go higher, then I think that the prospect for a soft landing becomes lower as far as, a chance for that happening goes.
So I mean, okay, yeah, you didn't come out and say that you don't think there's gonna be a soft landing. But I feel like that's where you were pointing to, because I feel like there is going to be a soft landing, but it's going to be a very fragile soft landing. That is, it's built on credit, and as long as as consumers can get more credit, then it's going to continue. As soon as we have that cutoff where the banks are like, hey, whoa, no more, and they turn off the faucet, I think that's when you're gonna have a rough patch or two. I would like to see what the Fed says when they do the rate cut this week. Is it this week? I believe it is, or is it the
Oh,
following week?
I can't remember off the top of my head. I know we've got
Yeah,
job numbers coming
it's
up.
either this week or next week. They're gonna do a cut, and so it how much they cut and what they say, what the announcement is when they announce the cut. The words and the verbiage is going to be key, as to get a good idea, because they look at numbers that we don't have access to. And we hope that these very smart ladies and gentlemen that are going through these numbers are really combing through it and coming to the right decision as a group. We know that the Federal Reserve Board it has people on both sides, because we've heard people, some say this and some say that. So we trust that they're going to give us the right guidance.
Yeah. We hope so, but I don't know. You said that, this is depending on the consumer being able to get credit still. Do we really want them to? With
No, I would rather bite the bullet, have a couple bad months, and get over it to the other side.
because that could really drag it out, right? Like if we've
Yeah.
got, even after this next rate cut, we're going to have historically high, well, compared to the last 30 years. I mean, if you compare it back to the 60s, 70s, and such, so the interest rate right now is actually normal. But compared to the last 20, 30 years, interest rates are really, really high.
Yeah,
Um,
one time it was a what, 15% interest rate in the United States?
yeah,
Yeah.
to beat back inflation. Yeah, absolutely. So I don't know that we really want more credit for the consumer right now. So it's kind of a two-edged sword. If we're going to drive economic growth, get more credit for the consumer, great. But then what happens to the savings rates after that? You know,
Right.
so the interest rates really have to come down a little bit more for me to want the consumer to get more credit. And we're looking at buying a new house um, in the next couple of years, and I'm just like, man, I really don't want to pay a 6.1% interest on a 30-year mortgage. That doesn't make any sense to me when I've got a 3% interest rate on what I've got right now.
Well, yeah, and yeah. So I mean, I had a off the cuff comment I would make if we weren't on the podcast, but since we're on it, you know what? I'm going to make it anyways. This is something I would tell Brandon if it was just him and I talking. I would say, well, then just invest better and pay cash.
I mean, good point, but yeah,
That's what I'm going to do.
if I get a 3%, my 3% interest rate right now has been below inflation for the past 2 years, so I've been okay with that. So we talked last week that NVIDIA would be a big market mover. Boy, was it. It was a big market mover in both directions, right? So we kind of had a big drop on all the big tech stocks the day that they reported. And then the days after, people were like, wait a minute, that earnings report was actually pretty good. So they bought back in again.
Yeah, it was
So,
weird because Nvidia went down. Like they went up immediately and everything was great. And I was posting in our group chat, hey, look, Nvidia blew it out of the park again. Its stock's moving higher, yada yada yada. And then all of a sudden the next day, Nvidia drops back down. And it had to do. I don't want to steal your thunder here, but from what I was reading, it had to do with the Blackwell chip. Am I correct on that?
yeah, there was a little bit to do with that.
All right, go ahead. Go ahead. Get
So
into it.
sales and earnings, again, more than doubled in the most recent quarter, showcasing the momentum of nearly 2-year-old AI boom. So we're still going on this, I guess. Concerns are existing. We've talked about our concerns here. I've talked about mine. Dave's talked about his and the investment in AI that has surged too quickly, in my opinion. Gross profit margins narrowed a little bit, but I mean, their customer base definitely did not narrow here. The CFO Colette Stress attributed the production issues with the next, attributed the gross margin issues to the production issues with the next generation Blackwell chips. They made a design tweak for the chips. That's what they were saying. We tweaked the design, we made it better, so we had a production issue. But they're saying they don't think their customers are going to notice it that much.
Did they yell stop the presses and have to redo it all? That would have been fun.
Oh my gosh! Stop the presses!
Stop the presses.
All right. Um, Production of the Blackwell chip is expected to ramp up as planned. Strong demand is still continuing right now. Results that highlighted the challenges from the increased complexity of the new products. Growth did slow from the rapid pace of last year, but still has incredible growth here right now for NVIDIA in the past year. So I think the question is still going on. Like, the stock doesn't appear to be in a bubble because the amount of growth that they've had in sales, but does that amount of growth in sales continue? Is the question.
The data centers, if you look at the numbers, the growth in the data centers was really where you saw the most growth, in my opinion.
It
The
was.
growth in chip sales was what we expected. It met expectations, but the data centers is where you saw huge growth, and that has to do with smaller companies who cannot buy the chips, but they rather lease out the data centers from NVIDIA.
Gotcha. NVIDIA is now the second most valuable company in the world in the market behind Apple.
Behind Apple.
Yeah.
Well, what is okay? What is Saudi Aramco valued at? Because I can't believe they're not number one.
I don't know. You have to Google it
I am right now as you talk.
or Bing it. Get on the Copilot on Bing, the Open AI Copilot. I do it every day. I do it on this show sometimes. It's very
Okay,
handy.
yeah. So I was right. It's more valuable than both of those. The market cap for Saudi Aramco is 6.7 trillion.
Okay, it's not listed on the U.S. stock market though, right? So I guess what
Correct.
I think I lifted this from market
So
watch.
that's a U.S. Stock market valuation is
Yes,
what you're going
U.S.
off of, not
stock market.
global, not global.
Right.
Yeah, because they make tons of money each quarter.
So we're still questioning the sustainability of and the returns of tech investments in AI. I don't know if you're on the same page as I am with that yet, or if you've been there, but I don't see this continuing. I mean, it might for the
So
short term, but over the long term, I don't see it continuing.
here's the thing that all these companies that bought those generation of chips, we had a bright future. We're thinking that hey, we're going to use these chips and it's going to grow in these areas and we're going to make profit, right?
Mhm.
So they kept buying chips and they're going to continue buying these chips from Nvidia. If we hit a point to where they're no longer making profit, they're going to stop buying the chips as much from Nvidia and it's going to cut in the sales.
Okay, so where's the
So
profit right now? Because I don't see it. I don't see it in Meta's Reality Labs. I don't see it with Google. I see nothing. I think they're still fishing for where the profit's going to be.
exactly, but they still believe that it's going to be there. They still are hopeful. They still have that 100% belief that this is the future. And so they're trying out different things and they're looking for different answers. Like I said, it's not until they reach a point that they say, all right, there's not as much profit here as we thought. Let's quit buying the chips. That NVIDIA will, and you'll see it. I believe you'll see announcements, you'll see signs of it before they actually come out and say we're gonna buy less of these chips because they're really not doing what we think they would have done.
Well, and then also, I think a lot of tech companies really still haven't figured out the open or the AI language model that's going to be the most profitable for them. But once they figure that out, then they're going to buy chips, that help them with that, and then everything else they're going to leave alone.
Right. Yeah,
So once
and
they
the
figure out where the profitability comes from, they're going to stop throwing everything against the wall. They're going to figure that out. They're going to focus primarily on that, and then maybe the rest of the stuff stops getting bought, and now we don't have the best comparables anymore for NVIDIA.
right, and Nvidia is always going to have a role in the gaming sector, in crypto mining, and in other industries like that. But as far as AI, yeah, unless this is my if, unless the companies like Meta or Google can actually start making a profit with these chips and showing that like the relevance, then you know eventually they're gonna have to look at the board of directors is gonna look at them and say, hey guys, we're making no money here. Let's cut
Right.
this.
Right. There's going to have to be a cut somewhere. So, it's not that NVIDIA is going to go away. It's not that they're not going to be the big player in this anymore. It's just the question is, can the sales that they're having right now continue? And the answer is probably not.
Right? Yeah. Not for, I mean, unless they actually find a way to make AI profitable, then okay, yeah.
Well, I mean, I do think even if we do make AI profitable, once again, all of the chips that we figure out are useless in the future, and we really should get a tech person on here, somebody that actually is in this game, and have them as a special guest so that they know a little bit more, about what they're talking about as far as that goes. But it seems to me like they're buying every chip they possibly can. They're spending, 10 to 12 billion dollars if you're Google, Amazon, Meta, a year on this stuff because they're trying to figure it out. But once they figure it out, they can narrow it down and say, no, we're only going to buy the Blackwell chip. No, we're only going to buy this chip, whatever. And then once they figure that out and everything else they stop buying, then they get to, decrease the amount of money that they're investing in this stuff,
Yeah,
even
and
once
so
it is profitable.
yeah. I do know a few people in the industry, especially in the gaming industry. I can reach out to them, but they're on West Coast time. So
Okay.
I'll reach out to them and see if they're willing to come on.
Okay. Cool. Awesome. I'm going to go to my next subject, which is a little bit different. I do think here, if you think that we're going to have a soft landing like Dave does, I got a stock to sell you. Delta Airlines. Price to earnings ratio right now sitting at 6%. Um, we've started to see a decline in travel demand, that revenge expenditure that the consumer was going on when it comes to travel, all of that stuff. That's starting to come back down a little bit, and that got priced into the stock. I think we've had the pendulum swing in the other direction now. I think we're undervalued. We're oversold here. Price to sales ratio right now is 0.46.
Hmm.
So we are expecting tough comparables for the airlines over the next year, right? So we're going to see declined earnings. But I think right now that's been priced in. I think it's been way oversold. I think right now you could buy it, especially if there's a soft landing. We start to get, the rate cuts and all that stuff. The consumers are able to continue spending. Maybe things get a little bit easier if the job market doesn't get hit the way that I'm expecting it to get hit, then we're fine. I also think, by the way, even if that does happen, even if we do have a hard landing, this is a good valuation for this stock right now to buy and hold for the long term. I do expect that price to earnings ratio to tick higher over the next 2 to 3 quarters, because I do think that earnings are going to decline, but I don't think it's going to go that high. I think this thing stays below 10, and I think it's a value.
Okay. Here's how I see it. If we go off of so yeah, I believe we have a very fragile soft landing, and business travel is still going to be key, and that's still going to be there. Personal travel, the thing is, here's what I see, Brandon. With Spirit and JetBlue and the troubles they had, and the merger failure, then back on, then not, and everything that's going on there, and Southwest being another value airline, with these value airlines not quite heading the numbers that they would like, which is
Mhm.
why you see mergers trying to happen, because they're saying that we can't stand on our own, but the U.S. government is. We need more value airlines to be competitive and have competition in the market. If they merge, all these merge, or if they just disappear because they can no longer stand, what you're going to see is people having to fly the higher cost airlines. So you're going to see people taking fewer flights, and that's gonna be the issue right now. The airline industry looks good because you have so many low cost airlines like Spirit, Frontier, JetBlue, Southwest, offering these deals for everyday people to get on the planes and not. Delta is more of a higher end, I would say. It's more like a Nordstrom's versus a Target, if you will,
It's a
on the
much
airlines.
better experience
Yeah.
for
And
flying.
so, but it costs more. But Delta's always been pretty stable. And if you look at if you look at just the chart right now, Delta's right at the price range and where I would be selling it. And the reason why is it usually dips down below 40 a share. And if you look at go back, Brandon, to your channel, the stock, it sits in a channel between 30 and 40, and it's sat there for years. There was one moment where it jumped way high, and it's recently come back down from that moment. And I believe there's weakness in the airlines, and it has to do with it started with Spirit and JetBlue and their weakness.
Okay.
But yeah, I don't know. I'm not a buyer at 41 a share for
You see,
Delta.
you see where how
I'm not a
fast,
buyer.
but that okay. You're operating with a COVID mindset, which is where it was between 30 and 40 during the COVID time. Now I'm going to tell you that valuation matters more than the charts.
I
The
think in
valuation's probably about
2022, when I go back 2 years, 2022 is past COVID. I think that's already past COVID.
no, not really. I mean, that's what the third wave of COVID was happening then. People were still scared out of their minds of the COVID virus in the beginning of 2022.
So I think, look, Delta is positioned well. Delta is profitable. It's probably the best as far as the airlines. It's the strongest at maintaining its profitability. As far as growth as a stock, I mean, I'm not a buyer at this price,
And
man.
by the
I
way,
know you say
go back to 2022 when it was at this price. The price to earnings ratio was much higher than what it is right now. I don't have it
yeah,
off the top of my head. I just know it was.
Yeah, the PE ratio is great, right? But I
So is the
mean, I want
price
to.
of sales.
Yeah, okay, I'll give you that too. I want to see the actual number of flights that we're seeing right now and where they're all going. I don't have that data. I did not have time to look that up. I did look up a few things on Delta right before the show because you mentioned that you were going to talk about it, and you said that was going to be a buy, and I knew immediately I was going to disagree with you. Um, I I would need that information to get a better argument here. My gut is telling me it's not a buy at this moment. If you own it, hold it. If you don't, I wouldn't buy it.
Domestic's pretty steady right now from what I saw. International seems some weakness, and I think the weakness has been priced in right now.
Well, yeah, the international weakness because United States issued travel warnings to certain parts of
Well, the
Europe
Middle East
recently.
has been having a problem, right?
Well,
Obviously.
Middle East, yeah, and Europe, and there's been U.S. travel warnings in Great Britain, and that's a big back and forth to London and Edinburgh, Germany. Travel warnings for U.S. citizens. You see travel warnings in more international countries right now because of unrest.
Yeah.
And that's I mean, yeah, the Olympics probably had a boost to their sales, but
And the
I
crowd strike issue, which I don't think we've
yeah.
seen in the quarterly report yet, but the valuation right now I think has swung to the low end for sure.
Well, it's taken a swing down, but I think it was overvalued at 54 is where the
Oh
peak
yeah, I
was.
mean maybe it was overvalued at 54, but I think now we're undervalued at 41. And that's
So
a pretty sharp drop.
where's your
That's like
price target?
20%.
Where's your price target?
I would say 50, maybe 49.
I think it's at my price target right now.
All right. But you're seeing the valuation. We've swung below. I think people are expecting declining earnings, and that's correct. That's the right way to look at it. I think by 2025, earnings start to pick back up again. We start to normalize and we can continue growth. I think over the long term, right now, this is a good buy. I think that if we have a hard landing, you probably get a better deal here. But on a soft landing, on um your premises here that the economy is going to have a soft landing, this is a good pickup. That's
All
my
right.
opinion. I do
There you
think
go.
so I wasn't going to buy it, but now that Dave's fighting me and I got passionate about it, I'll probably pick up some shares on Monday.
Nice. I'm
Just
glad I can inspire you.
it'll just be to make sure that I track this over the next like 3 to 6 months, just so see what
Yeah, you're
happens.
gonna pick up like 10 shares just so you can say you have it.
Exactly. But if I'm
Nice.
wrong, it won't have much of an effect on me. It's not going to break my.
All right, so let's roll into something different here, Brandon, if you're okay with it.
Sure.
So I told you I was going to talk about this ahead of time, so give you an opportunity to get your gears on. But Best Buy and their earnings report happened last week, and the reason why I'm bringing this up is I've mentioned retail a lot, and I mentioned it from a point of view of like this tells us how the market's doing, the consumer's doing. I know Brandon just had his spiel about the consumer, but we're going to go into Best Buy. I know American Eagle had good numbers. Target had good numbers. Walmart had good numbers. Costco's had good numbers as far as sales goes. Let's go into Best Buy right now. So some of the I'm going to go off this article, and it was on CNBC. Best Buy shares surge on profit beat and guidance hike. This came out Thursday after the earnings report. So feel free to read the article here, but I do like some of their key points here is that Best Buy raised its fiscal year profit guidance after exceeding earnings and revenue expectations for the most recent quarter. Let's go into the numbers. Right now, earnings per share were 134 versus 116 expected. Revenue top line number was 9.29 billion versus 9.24 billion expected. So that was kind of close there, but they were able to cut costs and drive those earnings higher. Now they expect to see full year adjusted earnings per share in the range of 610 to 635. That the prior range they had this was 575 to 620. So you see it's a huge jump in the bottom line there of their range for their full year guidance. They're definitely expecting to do well. The net income for the quarter was $291 million. and that was compared with 274 for the same quarter a year earlier. Their net sales did drop to 9.2 billion from 9.58, but they did cut costs. Again, that's how they're doing this, was costs cutting is what allowed them to hit this. So the company on Thursday posted a comparable sales growth of 6% in the domestic tablet and computing categories. So that's where they're seeing gains. They go on in this article, if you read the whole thing, they go on to say that this is driven by here I'll read some of the quotations here. We see a consumer who is seeking value in sales events and one who is also willing to spend on high price points products when they need or when there's a new compelling technology. So it's a lot of consumers upgrading their products, or when some new technology comes out that they need in order to perform whatever tasks they need to perform. That's when they're buying, and they're seeing the growth in that area in regards to that. The shares jumped more than 15% in trading on Monday. Brandon, your quick thoughts on everything I just threw at you.
I'd like to know where their revenue comes from for the most part. And I think I know, but I'm making an assumption, just being somebody that
Okay.
how PCs sell, how televisions sell, and stuff like that, just as an industry whole. A lot of the stuff that Best Buy sells, they lose money on. And so what they're reliant on, I think, is the Geek Squad services, the warranty programs, and all of that stuff that they sell to add margin. Because when you buy a personal computer from anybody, usually whether it's Walmart, Best Buy, Amazon, generally they're losing money on that. But they need to make money, on the warranties, the Geek Squad services, and such. That's where they need to really upsell the customer on. Television sets, personal computers aren't going to do it for them unless they add on to it, right?
Well, they did see a 6% jump in tablets and computers.
I mean, that's good. And the tablets, probably a lot of them are iPads, and they're going to make money on iPads. They're going to make money on Apple, which is why a few years ago they went through and they did when they were able to start selling Apple computers, they went and they kind of remodeled their entire store, so that one of the first things that you saw when you walked in there was Apple. The second thing that you saw in there was the phones, because they started selling iPhones and Samsungs and stuff like that, mobile, like probably 15 years ago, I would say. And those are money makers for them too. But really, they got to sell those warranty services. The big money makers that used to be a thing for Best Buy are no longer. So the software and stuff they would sell with the computers and Norton antivirus, all that stuff, they'll still sell those subscriptions, but a lot of people just get the computers home and download that stuff, sometimes for free now. So I'm actually really surprised their earnings per share is as high as it is. I haven't looked into Best Buy for quite a long time, but I'd like to know what's really driving that for them and what's driving profitability. Because if it's the warranty and all that stuff, consumers stop spending, that's going to go. That's not going to continue.
Well, what they're saying is, and is that like during COVID there was this huge purchase of big purchases, TVs, computers, sofas, couches, living room furniture, all kinds of stuff for the house, right? Well, it's 2024 now, and so people are having to upgrade, and that's where they're seeing like, hey, I need my computer's 4 years old, or I've had this through COVID and beyond now, and I need a new one, and they're seeing a lot of those type of purchases because they were down 2 years ago. Best Buy was not looking good. They had a COVID jump like everybody else did, but then they went right back down, and they were trying to rebuild. And they're hoping, like you said, with these services, the warranties. But if you go into Best Buy now too, Brandon, I don't know when's the last time you went in one. They have fridges, washers, dryers. They have all kinds
Yeah,
of appliances
it's
too.
been a
And
while too. Yeah,
yeah,
they've had those for a while.
yeah. And so I mean, I'm sure they're making profit off of those as well as the warranties on those as well. Because I know I've been in furniture a while in my working career for some companies. One I could talk about is IKEA, because I haven't worked for them in so long that I could talk all day long. When I worked for IKEA, their sofas was like a 70% profit margin. It was ridiculous, the amount of money they make off a sofa, but they lost money on a lamp.
We're really looking. Okay, I don't want to get too specific. It was
Yeah, no, but like,
it was less than that, but it was nice. It was a good
yeah.
profit, but it was less
So
than that.
they'd lose money on like most of the small little things like candles and lamps and stuff, but they do that in order for you to go in there and buy a sofa or a mattress or a bed. And that was the way it was set up. And most retailers had that same sort of setup. They had the things in there that were cool, little neat, chic little things that you could buy, but
Right.
they want you to drive to the big things that are going to make the money, the TVs, the washers, the dryers, and the computers for Best Buy. And it sounds like Best Buy's doing that, and they're successful right now at doing it.
Yeah, light bulbs are highly profitable. I don't know. It's a different thing, but I'm just saying, like, as far as a smaller item
Well,
goes. But
the light
anyways,
bulb industry did themselves in by making better light bulbs to the point that I haven't bought a new light bulb in probably over 10 years. They Duke Energy will send me out new LED ones that are power savers if you requested it a couple of years back, and I just used those. And they continue to offer that program every so often, and I haven't bought an actual light bulb in forever because they
it,
made them too good.
lighting has to do well for Menards because I mean it's the only thing you see when you park. My goodness, like that, it's right there in the front. You see it when you park your car. You see their lighting department. So you would think that that does well for them. I don't
So,
know.
but the broader picture here,
Subject.
Brandon,
Yeah,
yeah,
way off the subject.
the broader picture here is Best Buy did well.
Okay.
Other retailers are doing well. You're saying, and I'm seeing this as well, that it's the consumer going into debt on credit. I'm seeing it as well. The average savings is going down. Yes. The consumer's credit is keeping us afloat as an economy. But I mean, is this sustainable? Is this soft landing, the hard landing? Are you going to buy Best Buy? I'm not buying Best Buy because they jumped 15%. That gap up is already. If I had it before, I would have sold. That would have been a great.
Yeah.
That would have been a great turnaround. I'm not buying it when it gaps up that much.
The company has been wildly cyclical.
Yeah. So
So no, I'm not buying it. I will probably never buy Best Buy. No offense to anybody that works there, but I probably never will. Not
yeah,
because of
and I'm with you on that. But my point is, like, this is just another of the retail numbers that we're seeing. I said I'll be watching them this quarter to see how it is, and the retailers are doing well,
Dick's Sporting Goods
surprisingly.
knocking it out of the park.
Well, we'll
Down
we'll
the road.
see. That's coming up here. We'll see in here in a second. So, all right, let's switch gears from retails and the overall economy to a company that we were unsure of how they would do, and this is CrowdStrike. Everybody's familiar with CrowdStrike now. It was funny because right before they had that big problem, you and I were talking about them on the show, saying, "Oh man, that looks like a good buy. Looks like they're doing well."
Yeah.
And yeah, and then they had that issue happen, and it just sunk the stock. But let's look at the numbers that they posted here, right? So for CrowdStrike, they came out here. Total revenue was 963 million. That's a 32% increase year over year. Subscription revenue was 918 million. That's a 33% increase year over year. Annual recurring revenue. So this is, annual subscriptions or annual like licenses that they hold, software licenses. That grew 32% year over year to $3.86 billion as of July 31st, 2024. Of which 217 million was new ARR added in the quarter. So that was a big jump there. Subscription gross margin. So GAAP subscription gross margins was 78% in the second quarter. Non-GAAP subscription gross margin was 81%. Income loss from operations, income from operations was 13 million compared to a loss of 15 million in the second quarter of last year. So again, nice turnaround here. Non-GAAP income from operation, huh?
That should have been better.
All right. Well, hold on. Non-GAAP income from operations was 226 million compared to 155 of last year. So I could keep going on, but you see the story here is that we were right in that they were having a great quarter. We were right in that regard. We got everything right that CrowdStrike was pumping out the numbers, getting the subscriptions, building their core business. But what we didn't see coming and what nobody saw coming was that they were going to have that big fiasco that they had. But we were right in that we saw that the cybersecurity sector was going to have a huge growth. Palo Alto knocked it out of the park on their earnings. CrowdStrike knocked it out of the park on their earnings. I mean, every single cybersecurity was having a great quarter. So we were correct in that regard. Um,
Yes.
and so everybody saw that. Like cybersecurity, they're making money because this is a growing field that you need it, right? Um,
Yeah, but CrowdStrike's been around since 2011. You need to start working towards profitability. I'm just saying. I would have liked to see the losses narrow over the past 12 months a lot more than what they have, especially with the kind of issues that we're facing, not only as a country, but as everyday individuals. I mean, I can't tell you how many times I've had my information appear in data leaks. Corporations deal with this all the time. We get hacked all the time. I mean, I don't CrowdStrike could be doing a lot better, I think, and could have had a better quarter than what they did. It was a good quarter. It was, but it could
I
have
mean,
been better.
yeah, and they had positive operating cash flow, so that was positive. It's just
Yeah.
their, it's the what is it? The EBITDA. They have positive EBITDA, but when you add in the EBITDA,
Yeah.
that's interest, tax, and the rest, then it
Yeah.
goes into a more salty look there. But going forward now, when you see,
Depreciation and amortization. That's what you're
yes, thank you.
earnings before
Yes.
interest, depreciation, amortization.
I always forget that, and we say it all the time. And you figure out I would have it memorized by now after so many years in this business. But,
Mhm.
anyways, the point being, CrowdStrike was doing great. They were doing great. We even said that they're going to have a dead cat bounce after they hit the bottom, and they did. They bounced up. If you would have bought right at the bottom, you would be up right 40% right now from where they bottomed out to where they are right now. Here's the thing: a lot of companies are still saying that they're going to go even higher than they were at now. They're not going to return to the highs they were pre issue, but they are going to go higher than what they are now. In fact, Argus Financial says right now they're sitting at 275, says they're going to hit 325, that's a nice, 15-20% jump from where they're at right now. Do I believe in that? I don't know. I mean, they have to continue the growth in subscriptions, and after what happened, I don't think that's gonna be the case. I really like these numbers and what Palo Alto put out because it justifies what we were saying on the podcast, that cybersecurity is a growth sector for
Yeah.
this quarter, and it happened that it was a growth sector for the quarter, and that those were good buys. Uh, I mean, CrowdStrike just had the bad luck. They did a software update and
I
it
don't know
didn't
that it
work.
was bad luck, man. They got into a blame game with some of their top customers, and you don't do that. Keep your mouth shut. Seriously, you're going to rebound faster that way. If shareholders sell your stock, so what? Do you really want less business from Delta and Microsoft?
Yeah,
Is that your
exactly.
goal?
Yeah.
No, man, it takes 5 minutes to erode trust, doesn't it? All that trust and goodwill you spend years building up with your customers, it takes 5 minutes to just kill it. And
And
that's what
it's
they
going to
did.
take years to get any of it back.
Yeah.
Yeah. Yeah. So, I mean, I'm not buying the stock. I'm a bear on it. I don't think it's going to go anywhere, but I just want to, they had a good quarter. Even with that, they had a good quarter for them. Compared year over year growth. A lot of their numbers were negative last year, positive this year. They just got to get that bottom line to be more positive. So
Yeah, I think the next quarter, they're probably going to see a lot of the effects of their errors that they made. So
I agree.
I wouldn't look for maybe after that if the stock sells off heavily or something because of a bad earnings report, and you can maybe get a deal. But man, it's going to have to sell really hard because you got a price to earnings ratio of 400% right now. It's
Right?
it's really overvalued in my opinion.
Exactly. Exactly. I agree. All right. On to Warren Buffett. I know you had some things about Warren Buffett that you wanted to cover. Because I'm cutting out. I had a couple articles, but I'm cutting them out. Boom, we're gonna move on to Buffett here because Buffett. I didn't know if you were going to cover this or not, but I saw the headline. They sold more Bank of America.
Yeah, they sold more Bank of America, after the big Apple sale and stuff like that. But they didn't sell all their Bank of America. They still got a pretty large stake. They used some of the incoming cash they had from that to purchase a small share of Ulta Beauty. I think that it's like 1.2% ownership of Ulta Beauty right now, which I
Small
actually really like.
share.
Well, I mean, for them, I mean, it's like money Warren Buffett found in the couch in the lobby. It's what he used.
Right. It's that Bank of America sell. Let's just sell some Bank of America, buy 1% of another company.
Yeah.
Um, yeah, and it's always interesting to watch what Berkshire Hathaway does because it's at this point most of these purchases and sales are not Warren Buffett. At this
I think
point,
this one was.
you really why is
I do
that?
think this one
Tell me
was
why.
because man, like Warren's famous for keeping these companies that operate well and that operate well sometimes for decades, and Ulta has, and they've just had a and they dipped down to a price earnings ratio below 10 for like 2 days and a cup of coffee, and Warren snatched it up. I'm pretty certain this was Warren because he's famous for using that watch list, waiting for the perfect opportunity to buy. He bought it. It was announced. We had a 10% increase in the stock after it was announced. I still think it's a buy right now. I think price to earnings ratio is about 14%. I know I've mentioned the price to earnings ratio multiple times. That's only one thing that you're using to value a company, but Ulta has great management. It's done really well. I'm applauding this buy. I think it's a good buy, even though it's discretionary. Even though I think we're probably going to have some hard times over the next 2 to 3 years for discretionary. Warren Buffett's a man in his 90s that buys stock for the next 30 to 40 years still.
Oh yeah, he's
Yeah.
just looking at it for his kids at this point and his grandkids.
Well, I mean, whoever, and Greg Abel, who's taken over
Yeah.
Berkshire and wants to make sure this company continues rolling and doing well after he's long
And
gone.
didn't Berkshire Hathaway reach the 1 trillion mark too this past week?
It did. Yeah, it's a $1 trillion company right now.
Crazy.
Making me happy as a shareholder. I've held that for a while, as many of you know. Um, so a lot of people might ask, what is Ulta Beauty? I think like 2% of our listeners are female. So we're trying to increase that. We get that female listenership going. So the females that are listening right now might know a little bit more about Ulta Beauty than me and Dave, but I'm going to explain a little bit about who they are. And I'm going to try to be quick and try to be entertaining about it. So, Ulta Beauty, they here's what I like about them, real quick. So, let me just say what they do. Let's say that obviously they're a beauty company. They've got 25,000 products across 600 beauty brands. They own and operate 1,385 stores in the United States. That was as of the last quarter of fiscal year 2023. So it might be higher now because they're lifting that store count. They want to have it between 1,500 and 1,700 in the coming years. So they've got a partnership with Target Corporation that includes 500 Ulta Beauty products at Target. Ulta Beauty Rewards loyalty program has over 43 million active members. This actually drives 95% of their sales. Their loyalty program does. So that
Really?
tells me their customers, 95% of them are returning customers that are very loyal to the brand.
Man, nice. I didn't know that.
Yeah. So they sell cosmetics, fragrance, skincare, hair products, salon styling tools, bath and body products, salon services. In 2023, here's their revenue breakdown. I like to go over this kind of stuff with people. So if, if you see a hit on cosmetics, if you see a hit, somewhere in some industry, you could say this is how much it's going to affect my stock. Does that make sense? I know it's just kind of general there.
No, it makes
But
sense.
okay, so cosmetics, you're looking at 41% of their revenue. Hair care products and styling tools is 19%. Skincare is 19%. Fragrance and bath is 15%. Services for mostly for salons and stuff, that's 3%. Accessories are 3% as well. Brand partners include Estee Lauder, L'Oreal. I think I said that right.
Yeah,
L'Oreal.
correct. You
Okay.
did.
So if you look at L'Oreal and Estee Lauder, they make up about 55% of the total net sales.
Really
Yeah.
nice. Yeah, Estee Lauder's a huge company. So is L'Oreal.
Okay. 65%, of course, of shoppers are female customers. 80% spend in the US beauty category.
Yeah, so
Uh,
Warren, this is another thing that he's famous for. So when he bought Gillette back in the day, he bought it because you always have to go back and get new razor blades. And so he saw like the recurring revenue. And if you can
right.
get a customer that likes your product, they're going to keep coming back. So Ulta Beauty with cosmetics run out. You have to keep coming back to get more. So it's recurring revenue. And if you have a loyal base, like you're saying, with their membership, then you got the recurring income coming in.
Dave, I'm
No, I'm
not
here.
hearing, I am not hearing anything
I'm
you're
here.
saying.
You're freezing.
Am I good now?
I'm not. Well, I can hear you. Yes, I can hear you now.
Okay, I can hear you now.
You were frozen.
Really? You were frozen.
No, you were frozen.
No, you were frozen. Okay. All right. What did you say?
So like you could edit all that out later. No, I don't even remember what I was saying, but they
All
had
right.
that recurring revenue coming in. I was talking about Gillette and the comparison between the company and the recurring revenue, and it's going to grow and it's going to be strong. I like the membership there and how that works. So yeah,
Yeah.
it looks like a
So
good company.
so in 2023, Ulta had a 9% market share in the US beauty industry, which is a very fragmented industry. So 9% is really impressive.
Hmm. You know what? You know what's funny is that these companies like Ulta Beauty or even IKEA or Dick's Sporting Goods, some of these other ones, what they do is they pay a fee to Visa or Mastercard, and Visa or Mastercard will let them know their percentage of market share according to their credit card usages for a fee, and they'll let them know where all their consumers are, give them all the stats and numbers they want. And this is a way that Visa and Mastercard make extra money is by selling this information to these big companies, and so that the companies could get a good idea of how they're growing. And that market share 9%, that just seems low. But hey,
It's not low for as when you get Sephora, you've got Walgreens, which eats up a
okay,
lot of it all. There's a bunch of different brands and the
yeah, I
beauty.
guess you could
So
even consider Target and Walmart and Kohl's as Sephora as competition. So
yeah, yeah,
gotcha. All right, cool. All right, so we move on to earnings coming up, and then into final thoughts.
sure.
All right, earnings this week, everybody. Nothing much. Monday's stock market's closed. Tuesday, kind of light. We're getting to Wednesday. We have Dick's Sporting Goods, more retail to look at here. Analysts are expecting Dick's Sporting Goods to have a 35% year over year growth.
Yeah,
Man, they're
they're
expecting
killing it.
to, yeah, they're expecting to knock it out of the park. The other one you're going to look at is Dollar Tree because Dollar General tanked on their earnings. They just did awful, right? So everybody's wondering, is Dollar Tree also going to do awful? Is that what's going to happen?
Probably.
Um, so you're looking at that on Wednesday. The other one I'm looking at on Wednesday is ChargePoint. And the reason why I'm looking at that, if you don't know what ChargePoint is or what they do, their competitor is Blink Charging and Tesla. These are the charging stations you see going up all over the United States at different places in front of your grocery store or where have you. ChargePoint is one of the major players there, and I want to see, is there any more growth in them, or is Tesla just pushing all these ones out? And I covered this on one of our earlier shows, and it was when Tesla is able to make the charging stations that have both adapters at the same time, the Tesla adapter and the other one that ChargePoint came up with. However, ChargePoint and Blink were only making charging stations that had one adapter. So the U.S. government did all their deals with Tesla to build charging stations around the United States, and not Blink or ChargePoint. So they were losing money on it, and then they had to adapt and had to create their charging stations with both adapters available. So I want to see the numbers and the guidance here in ChargePoint and see what changes they made since the last time I looked at them. So that's what I'm looking at for ChargePoint on Wednesday. And then you go into Thursday, another retailer was Shoe Carnival, and then DocuSign. But we have a arms dealer in Smith and Wesson on Thursday, and kind of interested to see what they report. But that's what we got for the week coming up, Brandon. Time for your final thought.
I think both Delta and Ultas are still buys for the long term. I do. I think you do. I think you can add into them if we've got a recession, hard landing, you buy more, obviously. But I think they're both buys.
All right, you sold me on Ulta. I would say Ulta's also a buy. Yes. Um, I would think right now going into earnings that if you're going to make a play on any of these earnings, you buy Dick's. If you were going to make one, I'm not personally buying it, but that would be one play that's out there. And you would sell ChargePoint. I believe it's going to go down after. You could probably short sell it if you don't own it. I think it's going to have a bad earnings again because we're not seeing as many of these charging stations going up and Tesla's winning all the bids. So
I
that's
want to
my.
I want to hear what Dix is doing about loss prevention and cracking down on theft.
A lot of the retailers, that was an issue over the last 2 years, and they've covered that in their earnings call. So we'll be interested to see what they're doing
Yeah.
and what their approach is. A lot of retailers are moving to the doors that automatically lock so that you just can't get out and you're stuck. And then everybody in the store has to wait until the police arrive because
Oh
you want to
man,
steal.
that's dangerous though. That is so dangerous. And that is inviting a hostage situation. I am not a fan of that.
Right. Yeah. But that's what a lot of retailers are doing. But yeah, it will be interesting to see what they say.
Yeah.
Cool. All right.
You know what? Hold on. I have one more final thought here.
All right. Go
I,
ahead.
I think it's interesting. You're on the soft landing side. I'm siding still more on the hard landing side. You would think that we would have taken different positions on Delta. You'd
I'm
think
not
that
buying it, man. I'm
you'd
not
be the
buying it.
buy, I'd be the sell.
Yeah.
I don't know. It's
You're
just
right.
interesting.
Yeah, I look at the historical trend with Delta and where we're at, and I don't know, man. I'm not buying it at this. You haven't sold me on it. You sold me on Alta.
Okay.
You haven't sold me on Delta. Sorry. All right. Thank you for listening. Hit that subscribe button, and as always, we hope we have been entertaining, educational, and uplifting, because we want everyone to make money. Have a good night.
Have a good night.